Good evening, everybody. Peter here, Forte Trader. Thanks for watching. Let's get going here real quick. I keep, I don't know why. I've been gone for a little bit here, at least off the internet. Been working with some trading guys in Chicago, learning about market inverse and correlated relationships and stuff. It's helped me a lot in trading, and also was introduced to the bond market by a friend and something we were going to put some stuff together. Right now, don't know where that is, but right now it's been a rewarding experience, and I want to share where I thought that the market was going to go today. And I wish I went ahead and just posted something on this so I could have proven myself and felt great. We have Janet Yellen that just spoke about 20 minutes ago. The market is going to open up here in the overnight session here pretty shortly at 5, which is in about 22 minutes. And I saw on a long-term chart on Friday a big sell-off here to prior support levels that broke off resistance levels. Sorry, I'm kind of end of day here. It broke down here into and kind of became a new support level. Small breakdown. But my prediction was, I thought with volume today being a Monday and with the news with Janet Yellen, that most likely the big boys and the big girls are not going to probably be trading today, and most likely just some liquidation will be happening, which seemed like on our volume analyzed there we sold under 1 million contracts. Sounds like a lot, but that's normally just about half of what this thing normally trades. So that's the 10-year note. I wrote a blog today. I shared some of that content from some other authors. When I do that, I do give them the credit and put their name on it. Even if I'll borrow a photo or something, I let people know who it's from and I give them their credit. But in regards to how interest rates hikes affect the futures rates, the futures notes and bonds, it's really about the term, and that's what we talk about. Is we already know the Fed, the central banks, pretty much own the economy, and they own it within the short-term interest rates, right? They have full control of that. And so sometimes our longer term bonds, like the 30 years, as we scale up higher, are controlled more by investors, which are bond traders that speculate a little more on inflation and things over than what the Feds do on a short-term level with us. So banks tend to benefit, sometimes not, when auto industry can get affected by rate approvals and stuff when prime rates go. But the prime rate is pretty much controlled on the shorter term, on the the ZQ or something like that. I'm not sure what that's even called. I don't look at it. We look at these markets in inverse relationship basis when we're looking at the old ES that we used to trade a lot. Thing whipsaws us a lot more, but we try to gauge different markets to keep a broad perspective on when the market moves. When one market moves and does a little knee jolt right before the other one's doing nothing. I think one of my mentors used to call it like a head scratch moment right there. But we use that to try to keep a heads up on directions on different market times and stuff. So the 10-year, it's nice because it's heavy, it's liquid, it's thick, and what I like about it is it's also a safe haven for a lot of investors when things happen geopolitically, like the Brexit and things like that. Most investors tend to find that middle sweet spot interest note, which is the ZN, is the ticker symbol, the 10-year note. And that's where they find it safe, even when there's rate hike news, when you have things that happen internationally, which they say geopolitically, this is when we tend to have a safety zone and investment in this kind of instrument, is what I've been seeing and what I've been learning myself. I could be wrong. But yeah, today, pretty much, if I can pull this up for you, again, wish I predicted this or exposed this prediction. I thought, if anything, I figured it could be an up market or all the way into just a range, and it was definitely a tight little range. Market's going to open here in the next less than about 16 minutes or so. I'm thinking we're going to break back down possibly into where we first broke resistance and became a support, and possibly going to break through there, allowing ourselves to maybe get in these ranges here into this next week, possibly where I can see breaking back down into all the way down into like the 122.2s, and I'm kind of playing up and down and within here. Again, I can be wrong. This is just my theory. It's just a speculation that I have, and you know, you want to just watch the markets, have your base decision, and that's why we also use core risk management strategies, so that when we are incorrect, we don't get what another word that one of my investment buddies up in Chicago uses a lot, and I love it. It's called getting your face ripped off. We've all gotten our face ripped off a lot harder in the past, because that's when we're learning risk management and how to optimize and calculate a controlled risk situation. By using risk management strategies, we limit getting our faces ripped off like that. That and a few other things that we talk about in our course. So, social media is supposed to be a place where, you know, again, for our startup situation, it helps us a lot if you can follow us on our Facebook page or also on our YouTube. Subscribe on there. I'll be trying to keep these pre-market videos. What I'll try and do is I'll try to put them here in this free video section we built on the site. You can access it through there. Keep this site we have, fortetrader.com, in your favorites. Subscribe through YouTube. We'll also try to feed it on through there, perhaps maybe even into our Facebook group page. So just try to sign up for one of those things if you want to keep track of what we're doing, what moves we're making early in the morning before the market does its thing. And for the morning session, we might do a post-market session like today. But I'm just making this video because it's been a while. I've come a long way in the last 90 days, learned a lot of great things that we're going to be sharing in our course. And I just look forward to seeing all you guys there. Again, thanks for the support. Thanks for watching. And we'll see you guys in the next day. Have a good night.